What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 10th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about something that I feel a lot of people have been struggling with as of recent. It's something that a lot of people get caught up in when they're investing in crypto, and that is what's known as the chop, the noise, the short-term volatility in the market, the headlines telling you why you need to panic into the market or out of the market. As many of you know, over the past couple of weeks, we've been in this sort of chop in the market. Prices have gone up and down in the short-term time frame, and everyone's trying to tell you why it's doing what it's doing, what the rationale is for it. I want to go ahead and challenge this train of thought, and I want to instead not only just correct this mindset, but also provide a potential way to actually look at markets and try to have a much more rational perspective. Now, before we dive into all the things we're going to be diving into, from data science models to the various metrics, I want to go ahead and mention that this video today is sponsored by Deeper Network. So for those of you who haven't heard about me talk about it before, we've had them on the channel. Deeper Network is a project that's focused around decentralized web hosting, decentralized VPN technology, basically allowing for a more open and freer web that allows you to access the things that you love while also having security in mind. They're a massive network of over 50,000 nodes where even you can contribute to help decentralizing the network. And if you're interested in learning more about it, you can check out the website, as well as checking out the recent Indiegogo campaign where they've raised nearly $3.5 million from nearly 11,000 backers across the world. And if you're already sold on it and you're interested in checking out the Deeper Network and playing a role in it, you can join in by shopping at shop.deeper.network.com. I'll have the links down below in the description if you'd like to participate. All right, let's go ahead and dive into the substance, guys. Let's go ahead and kick things off here. So I want to go ahead and first focus in here on this range of price action here today. Now, a lot of people were very ecstatic to see Bitcoin popping up on the 4-hour chart, or even if you want to view it on the daily chart, going up upper single-digit points, pressing close to that 10% range. It's usually kind of the moves that people get excited about, and vice versa as well. When we saw price rolling over, the bears, the shorts go absolutely wild. The I told you so personalities come out, right? Everyone loves when price is moving in their direction. It fulfills their narrative. But if you're focusing in on the short term and falling into this mindset, I can tell you guys more than not, and trust me, I'm speaking from my past failures and experiences, this is not the way to go. So I'll give a great example of this. So this price action, a lot of people assumed, first off, let's focus on the upward move here in price. A lot of people assumed that the surge we had here was coming in from a lot of the confidence in the market around realizing that this supposed executive order that President Biden was putting out in the United States, of course, the U.S. being a large economy on the world stage, where a lot of crypto holders and investors in capital are at the moment, was this kind of fear piece that had been dragging down markets for some time before the move we saw. And when the actual executive order came out and we realized it wasn't all that bad, well, of course, when we go back to price here, we see a massive move higher, right? Now, just a matter of a couple of hours later, that's 24 hours, price starts rolling over back again. Now, I want to go ahead and emphasize what went wrong here, right? Is there anything about the executive order I have to say? No, not really. It was kind of a non-event. And a lot of things that crypto markets, or at least the investors in the market, fixate on are non-events. The executive order is not the topic of discussion here. It has to do with the fact that people always tend to want to have a justification for why price does the things that it does. Whether it is on their side of the equation, betting the market's going to go up, or the other direction if they believe the market's going down, right? No matter what end of the spectrum you stand on, people fall victim to this mindset because they're trying to look for a narrative to justify why price does what it does. And the fact of the matter is, guys, is that price doesn't need any justification. It doesn't need a headline. It doesn't need some major investor like Warren Buffett to say Bitcoin is great or it's bad. And to be completely frank with you all, markets are driven by two key things that we talk about a good amount here on the channel. Market order flow. Are more people willing to buy or sell Bitcoin at the best given price? And on top of that as well, how many people are waiting to buy or sell Bitcoin at specific price ranges? What's generally known as the order book or limit orders on the market. Right? the more pressure you have on the limit orders on the order book to sell, aka the asks on the order book, and we'll take a look at that here in a moment on Bookmap, the more difficult it is for price to really get higher, and vice versa. If there's a lot of bids on the order book waiting to buy Bitcoin just slightly below the current market price, that can act as an effective means of support if there's not enough people willing to sell in to that buy side pressure. So we're going to go ahead and just take a look again visually at this kind of key telltale sign here. So we've got Bookmap up here. They're one of our partners here on the channel. One of my favorite tools that I like utilizing outside of TradingView because it gives us this kind of oversight here as to the heat map of the market, where the buyers and sellers are, and are they growing in pressure either direction. So we can see here, for example, that this is taking a measurement of the order book here, right? Those asks that we were talking about, people who are waiting to sell Bitcoin at a given price. And then also here, the bids on the market price, where people are willing to buy Bitcoin. And you can see that as it gets hotter and hotter here, this means that there are more Bitcoin. As we can see here, we've got on Coinbase, for example, about 99 Bitcoin waiting to be sold at 44,000. Now, of course, over time, that's gotten a little bit weaker here. The asks aren't really that strong here on the sell side, right? So there's not too much forward-facing resistance outside of the really narrow-ended portion of the order book here, right? That's constantly ranging around price. And then down here, we can see the real only highlighted range here that's significant is really the buy side pressure that comes in here, or at least the bids on the order book around 35 to 36,000. There's a good accumulation, a couple hundred Bitcoin here waiting to be bought at that given market price range, providing an effective means of support. So only if sellers are able to clear through that buy side pressure, then price cannot go any lower. It's just how an order book works, right? Now, if they were to pull out their orders, right, and they decide they don't want to buy there, and we can see that the order book can change, the order isn't fixed in, right? It can change over time, but it's going to make it a lot easier here for price to start escalating if buyers clear through either buyers or sellers clear through this kind of initial wave on the order book. That's the important thing to understand here. And now that we understand that that's really what kind of dictates prices, we have to understand here that, again, a lot of these headlines, all the while some of them can hold weight, it is really a matter of whether or not the market is going to buy or sell off of the actual things that are going on in the world, right? And, you know, a lot of these things, these kind of crypto regulation talks, they're generally non-events. It's been a talking point for years that people have talked about, both in a bullish perspective and a bearish perspective. The idea that the central bank of the United States, the Federal Reserve, or the CFTC or the SEC is going to go after crypto, when in reality they've actually been pretty decent at allowing an environment of innovation to foster silently, right? And at the same time, there have been prominent crypto regulations on scams and bad practices, which is good in my mind, right? So anyways, just want to put that out there, guys. Again, it's why you shouldn't get caught up in the headlines, no matter what resources you turn to for your news. It just really gets in the way of the long-term game. Instead, what I'd really emphasize focusing on is things like Bookmap, where, you know, we're getting that I read on the market order book data, but then also looking at the data science models here we have at our disposal to get a general idea of where things could be heading. And what's so cool about the data science models in crypto is that whether it was back in May of 2021 when the market was down 55% and everyone said, oh, it was a bear market, and we were like, nope, it's not a bear market. Or back in November of 2021 when everyone was saying that Bitcoin is going to go, so it's going to be a super cycle, it's going to overnight, it's going to go to 100, 150K, 200K. We said, no, not yet, we got to wait. And then also, again, people are again calling for a bear market here, right? At least the headlines are doing this. And that's, again, where you find a lot of people thinking with that mindset of dramatic extremes. We have been consistently relying on the data science models, and all the while they are not perfect. There is no one perfect model. When you utilize an aggregate of data science models, you can start to get a really good roadmap of where price really is expected to head. When price is cheap, and also when price is probably getting towards the later stages of the cycle and is probably overbought, right? So this is a really interesting new model I wanted to bring your guys' attention to from lookintobitcoin.com. It's a free website, really great resource. I recommend you guys come to it, make it a part of your weekly or monthly routine when you're looking at changing or making adjustments to your investments and thinking about the market. And you take a look here, we've got a really interesting perspective here about where the market is right now, comparative to the indicators that give us a good idea of when price might be overheated and underheated. What looking at Bitcoin did here is aggregated a whole range of different indicators. The Bitcoin price prediction chart is what they call it. It includes things like the delta top, top cap, and terminal price, which help us to get an understanding of the potential overheated range, as well as balance price and CVDD. Now, I'm not going to dive into all the details here for each of these different models. They're in the description here, and they also link to some various other resources here on the website. But this model alone gives us kind of two general oversights. And not only when market price might be overheated and oversold, but right now it shows us that price is probably about where it should be. Perhaps, and as we've talked about during back in the May correction and where we are now, perhaps markets were just simply overheated here back at the beginning of 2021, just like they were back here in June of 2019. If you take a look at the previous cycles, if you look back here from, for example, the cycle top here in 2011 going into 2013, you'll notice here that as well as over here in 2015 and 2017, during the early phase, we hadn't recovered this much so quick comparative to the two previous cycles, only to be comparative to the first cycle back here. And that's why, again, we came back down just like where we should have been back here during this consolidation range. We've been having more dramatic rallies, more dramatic corrections, more dramatic rallies, more dramatic corrections, right? So right now, we're right about where we should be. And we still, according to the models here that have shown really good consistency throughout history about where Bitcoin can go, we're still looking at some target range between 100K to 200K. And all the while, I know people would say that's a pretty wide band, I'm not going to doubt that for a second. It at least showcases that we're likely not at the top. And on top of that, if we shoot somewhere in the middle, 150K seems like a pretty reasonable price target. That's probably going to put Bitcoin around at the current supply. Again, give me a margin of error here, if you will, around $3 trillion for the overall market cap of Bitcoin. And if you're talking about total crypto market cap and altcoins owning maybe 2/3 of the market, right? You're talking about trillions upon trillions of dollars in market cap for crypto, even getting close to pressing up towards that $8 to $10 trillion range for total crypto market cap. And that, I believe, is totally doable in this cycle. Crypto valuations, just like every valuation of every asset class, can go out the wazoo, right? So again, it's very important to understand here to just focus on the long-term time frame. And the last thing that I think is really relevant to keep an eye on here when analyzing things in this kind of perspective, right? We're following the market order flow, the order book. We're taking a look at the data science models. The third one that is important is, when in doubt, zoom out. Take a look here, guys, at this chart. This has been generally unaltered for the past year. We've been constantly talking about the expanding cycles for Bitcoin. We were probably, if I were to give kind of like a rough percentage estimate, it's probably 10-15% of analysts in the space believed in the expanding cycles. Most people are on the 4-year cycles, right? And I'm not here to see I told you so and stuff, right? Not like that. I'm just making it clear here that we've been focusing on the idea that it's going to take longer to get to the promised land. It's going to take longer than most people expect to get where we're going. And if we take a look here, this is a completely doable roadmap. Okay. Now again, with a month margin of error, one way or the other, we're generally looking about 9 months out from now. Or excuse me, about if you're including this month, right? In order to get up to this range around 150K to 100K. Now, to just go ahead and again map out whether or not this is reasonable, excluding even the dramatic, wick that we had here on the candle back in March of 2020 during the pandemic sell-off, we can see that from this general base range here, right around $7,000, Bitcoin in a matter of 11 months, and sorry, you can't really see it here. I'll go ahead and just What I'll do here is expand out so you guys can see the percentage gain, right? So the real close was at this month here. It's about, if you really wanted to take it from the month before, it's about 10, 11 months, where we saw a 900% move in Bitcoin's price. 914%. From this point onwards, we're asking that in a matter of 9 months, we can get a 500% move. Just a tad bit over a half of what we saw before in the 2020 cycle. Now we know that these rallies, once they revisit the previous relative high from the previous go around, they're usually about 300%, right? So if you really take it from there, we're only asking for about a 200% rally. More conservative than the previous two that we've seen in this cycle, just to get to our most optimistic target of 200K. It's totally fine if we agree to disagree or people see things in different perspectives. My opinion is not like the ultimatum, guys, but I think this is completely doable. We've been holding to our guns here that this could come true, and the soonest we see something that could start to throw this off, right? If we break below this 30K range significantly, yeah, maybe we might get a bit more kind of conservative and realize that it's going to take a bit longer. But this really isn't the time to panic. We're in a consolidation range, a zigzag in price, chop on not only the intermediate time frame really over the past year or so, but also here in the short term, those short-term daily moves that we've been seeing here where, you know, people are trying to leverage trade, people are going crazy, doing 5, 10, 20x leverage trades, trying to make $1 million overnight, when in reality, people should just be focusing on the trend here, the higher lows in price, the general contestment of resistance. And when we break through here, we've got that potential to break out higher in my mind. So anyways, I've rambled on enough, guys, today. If you liked this video, consider dropping a like, consider subscribing and hitting that bell icon. And if you guys want to support the channel, you can always check out Bookmap down below. It's one of the major tools that I use alongside TradingView. And you can also consider subscribing to the Dash Report if you like my rambling. You may also like my writing as well. If you like my rambling, you might like my writing. I like that. Anyways, guys, thank you all for giving me some time out of your day. I appreciate it as always. And leave a comment down below if you have some thoughts on the video, whether you agree or disagree. Take care, and I'll talk to y'all soon.